Memecoins erupted with a staggering 16% surge in the last 24 hours, catapulting their combined market capitalization to an eye-watering $73 billion. Trading volume spiked to $26 billion, a level not seen since the fevered altcoin turnover of early 2024, and for many, the question on everyone's mind is whether this marks the dawn of a genuine Memecoin supercycle, or merely a fleeting paroxysm of online hype. The inclusion of BONK in Grayscale's Q3 fund restructure, while subtle, signals institutional recognition of Memecoins as a legitimate subsector. Yet before declaring victory for the meme brigade, it is crucial to weigh both the opportunities and the inherent risks. Across blockchains, Memecoins from every corner are moving in lockstep. Solana's BONK and WIF both leapt more than 12%, while longtime favorites DOGE and SHIB rallied in unison. Even microcaps like 4chan tokens and Murad Mahmudov's so-called Murad picks, SPX 6900, MOG, Popcat, GigaChad, and Appy posted double-digit gains. The synchronized breakouts suggest capital flows are treating Memecoin speculation as if it were a real economic sector, complete with its own momentum. Whale purchases of PEPE drove it to $1.37 billion in 24-hour volume, confirming that large players view Memecoins as more than jokes. They see genuine upside potential. When so many assets rally together, it creates the illusion of resilience and strength and depth, which can in turn attract even more retail and institutional interest. However, synchronization can be a double-edged sword. When markets move en masse into a crowded trade, they become vulnerable to a collective exit. A single shocker regulatory notice, a major hack, or a high-profile paper-handing event could cascade through dozens of tokens, triggering a chain reaction of liquidations. The meme sector's furious volatility is attractive in bull phases but perilous when sentiment flips. Retail investors, once burned by the 2021 Memecoin crash, may hesitate to fully embrace this rally, which could leave the sector precariously dependent on a handful of whales and traders. Amid this frenzy, SPX 6900 has emerged as the industry's unofficial barometer. While not an official index, SPX 6900's price action often leads broader Memecoin movements, making it the token many traders watch to gauge overall market health. Over the past week, the SPX's holder count surpassed 43,400, a local peak, and inflows to exchanges have declined, indicating reduced selling pressure. More wallets are accumulating, and fewer tokens are being offloaded, suggesting a medium-term conviction rather than a knee-jerk reaction. SPX's chart structure further supports this optimism. After retesting its 6-month low near $1.55, SPX has flipped that zone into firm support. A successful break above $1.74 would invalidate any lingering bearish patterns and could signal a broad resurgence, drawing capital not just into SPX, but into the entire Memecoin ecosystem, including forgotten forks and speculative tokens that have languished on the sidelines. Yet concentration of sentiment in a single token is also risky. If SPX 6900 stumbles, whether due to token-specific issues, structural flaws, or a sudden shift in trader psychology, could sour the broader Memecoin narrative. Traders who anchor on SPX as the sector's pulse may find themselves overexposed. When other Memecoins fail to follow, moreover, SPX's recent decoupling from Bitcoin, while touted as a sign of independence, removes the relative stability BTC often provides. If Bitcoin's price were to correct sharply, Memecoins could see forced deleveraging and a rapid flight back into the relative safety of larger assets. Institutional validation has also crept into the Memecoin universe. Murad Mahmudov, once a staunch Bitcoin maximalist, now publicly backs Memecoins as the next speculative frontier. His Murad picks have drawn attention from both retail and institutional players, seeking alpha in a market thirsty for the next big trend. While celebrity endorsements can ignite FOMO and drive viral price spikes, they also bombard Memecoins with fickle sentiment. Once influencers move on, capital may evaporate just as quickly as it arrived. Grayscale's quiet nod to BONK in its Q3 fund restructure is another signal of rising institutional legitimacy, yet it is far from a comprehensive endorsement. institutions remain wary of Memecoin's regulatory uncertainties, lack of intrinsic utility, and extreme volatility. Custody. Solutions. Auditing standards and compliance frameworks for Memecoins lag far behind those for Bitcoin and Ethereum. Without robust infrastructure, institutional participation may prove shallow, enough to spark rallies, but insufficient to underwrite a long-term supercycle. A final bullish indicator is the record stablecoin, reserves sitting on exchanges over $31 billion in USDT and USDC on Binance alone, while Bitcoin balances dwindle as hodlers withdraw for cold storage. In past cycles, such stablecoin dry powder has preceded explosive runs in altcoins and Memecoins. The logic is simple. Liquidity providers and traders can deploy stablecoins into breaks and retests without needing to sell other assets, fueling sharp upticks. But this same stablecoin buildup can reflect caution as investors hoard cash either in stable form or ready to rotate into traditional safe havens till they see clearer entry points. Macro conditions deteriorate, that capital may flow into fiat or bonds instead of Memecoins. Technically, SPX 6900 offers one of the clearest risk-reward structures in the meme space. Traders watch support at $1.55, resistance at $1.74, and potential invalidation below $1.45, but the broader Memecoin chart remains choppy. While leading Memecoins have rallied, second and third tier projects often underperform, creating dispersion risk. A broad Memecoin supercycle would require participation across hundreds, if not thousands, of tokens, something not easily sustained without a unifying narrative or real-world catalyst. In contrast to Memecoin's idiosyncratic dynamics, traditional markets are digesting its own catalysts. Bitcoin explores new ATH territory, while seasoned buzz swirls in DeFi and NFT sectors continue their gradual recovery. The artificial intelligence craze looms large and may siphon speculative capital. Memecoins risk being overshadowed if larger narratives like the rollouts of AI integration in DeFi or real-world asset tokenization capture market imagination. Ultimately, Memecoin market stands at a crossroads. On one hand, synchronized rallies, SPX 6900's leadership, whale accumulation, and stablecoin dry powder all argue for a significant bull phase, perhaps the most dramatic yet. On the other, the sector's structural vulnerabilities, regulatory risks, shallow infrastructure, extreme volatility warn that any supercycle could be short-lived and fraught with peril. For traders and investors, this landscape demands a blend of boldness and caution. Positioning in SPX 6900 and leading Memecoins may yield outsized gains, but prudent risk management through position sizing, stop-loss orders, portfolio diversification remains essential. Keeping an eye on on-chain signals, whale movements, and exchange flows can provide early warnings of trend exhaustion. And as the market digests both hype and validation, a nuanced approach that balances speculative exposure with awareness of systemic risks will be the key to navigating the Memecoin frontier. In the end, the truth of whether the Memecoin supercycle has truly begun will be written not just in fleeting price charts, but in the sustained participation of institutions, the resilience of infrastructure, and the collective sentiment of a market that thrives on its own brand of chaotic creativity. Only time-man data will tell if the 16% surge is the opening salvo of a multi-month supercycle, or a brilliant fireworks display that fades before dawn.